I'm Joshana Maharzan and my student ID is VNG2006. Today I'll be presenting on my topic Corporate Taxation and Accounting of A&Z Group Limited, which is one of the assignment based on our unit Corporate Accounting. So I'd like to start with the introduction of my topic. As we all know that the business organization is required to conduct their business as per the government compliance, and they have to follow the rules and regulations which has been introduced by the government authorities. This presentation defines that the business organization to follow the tax compliance and treat the tax expenses in their financial statement. This report contains the evaluation of the financial statement of Australian and New Zealand A&Z Company Group Limited. It has shown the treatment of tax expenditure in the books of accounts and shown the DTA and DTL recognition criteria of the company. Hence, it has also disclosed the differences between the tax treatment in cash flow and income statement based on the current year. Now discussing about the financial terms used in the books of accounts, it includes the accounting profit, tax profit, temporary differences, and taxable temporary difference. Accounting profit is the profit that the company makes different taxes. It is a profit that is arrived at when we deduct company expenses from the company's revenue in a particular period of time. Taxable profit is defined as a profit in which income tax is payable, and the temporary differences is recorded the differences in the net cost of assets and balance sheet shown liability. Likewise, taxable temporary differences means the part of the temporary difference. So by comparing the key players of the books of account, we can conclude that deductible temporary difference is the kind of differences that arises in deductible amounts while determining the taxable profits of future periods when carrying amount of assets or liabilities is recovered. And the deferred tax assets are those assets that arises due to the deductible temporary differences when the taxable income decreases in future due to such differences. The deferred tax liabilities are when the taxable profit is less than the accounting profit, the deferred tax liability is created. Now, I'd like to discuss about recognizing DTA and DTL of the A&Z company. So DTL, if there are any expenses which has been allowed in the income tax return or any income which has been disallowed while computing the income tax, then it will be proved provided the temporary difference to recognize. Same wise, DTA is related to the expenses which has been disallowed in the income tax return or any income which has been allowed while computing the income tax but has not been recorded in the books of accounts, then it will provide the temporary difference to recognize the deferred tax assets of the company. The tax expenses in A&Z company under the latest financial statement. The tax expenses of this company has disclosed the income statement of the company and charges from the income earned during the year. In context with the A&Z annual report, it can be observed that Note 4 has disclosed the income tax expenses 2,609 million in 2019 and 2,784 million in 2018. Same wise, DTA and DTL in books of recorded account, they require to be reviewed each financial year to recognize and adjust their tax liability resulting from the past financial events which has already led to such recognition of DTA and DTL in the past periods. From the balance sheet of the Australian and New Zealand ANZ Company Group Limited, it can be seen that the following disclosure has made by the company as per Ladus, Nicholas and Samara 2017, as you can see in the table. So, the differences in the tax expenditure and tax payable shown in the books of recorded accounts can be seen in the table. The recorded books of company has prepared as per the relevant accounting standards and generally accepted accounting principles, which indicate that the income statement will include all the expenditures which related to the current financial year in the form of income and expenditure of the company, while all the assets and liabilities of the company, whether or not related to the company, will be disclosed and recorded in the balance sheet of the company because they are related to the businesses of the company and required to be recorded, as it can be adjusted in the future period of the company. So there are some of the temporary difference and some of the permanent differences. Now we know that temporary differences are those differences which occurred during the year due to the accounting and tax law and regulations applicable to the company. The differences will be reversed in the future financial period and provide the virtual certainty to get reversed and adjust as per the requirement of the company as per Elver and Elver 2016. As in the table, we can see that the deferred tax expenditure income relating to the origination and reversal of temporary differences has been shown in two different years. So, however, the permanent differences are those differences which occur during the year due to the accounting and tax law and regulations applicable to the company according to Gupta and Code 2019. These differences will not get reversed in the future financial period and doesn't provide the virtual certainty to get reversed. Here are the list of the accounts recorded in the ANZ company that involves the sales of divestment, shares of associate profits, interest, overseas tax provision are no longer required. All these shows the permanent differences. While observing the tax treatment of ANZ company, by analyzing the annual report, we found out that tax regulations applicable to the company are complex and require a deep analysis to follow as per the requirement. They have an impact on the financial transaction which has been recorded in the books and required to be followed in aligned with tax regulation to provide the appropriate treatment. Thus, they lead to the DTA and DTL generation in the books of accounts of the ANZ company so that it can provide the better treatment of the taxation matter. It is required to understand the accounting and taxation matters so that accountant can justify the compliance required as applicable to the company and provide the best treatment in the books and calculation while depositing the tax amount with the relevant authority. Finally, we can conclude that the tax treatment of ANZ Company Group Limited in the annual financial report, it can be concluded that DTA and DTL are required to adjust in the books of accounts as for the appropriate manner by complying with the relevant tax law. This can also be observed that a company can forecast the future tax planning and procurement of fund to adjust the tax amount with the relevant authority. Therefore, it is required to understand that the tax compliance applicable to the company to adjust the treatment as required by law and forecast can also be done easily. So here are the list of references that I have used in the report and this presentation. Thank you.